Welcome back to Investing Talk podcast. Today, we are focusing on a really unique industrial giant. It operates right at the intersection of national security, critical infrastructure, and next generation energy, BWX technologies.
Yeah, BWX Technologies. It's more than just a typical defense contractor, you know.
Yeah.
It's absolutely vital to the U.S. naval fleet. And its whole future really depends on leveraging that core expertise into these new energy markets. The stock's seen some incredible momentum lately.
Right. So based on all the financial analysis, the technical charts, the market intelligence we've synthesized from your sources, the big question we're tackling for you today is pretty direct. Is BWX Technologies a good time to buy right now?
Exactly. We've taken all of it, the analyst reports, the chart data, even the market rumors, and put together the full picture. So you'll hear about the huge contract backlog, the financial efficiency, but also some very specific technical warnings you really need to pay attention to.
Okay, sounds good. And before we jump into all that analysis, please remember to subscribe, like, and comment. It really helps us out. Also, if there's a specific company you want us to look into next time, just leave us a comment below.
Definitely. So we'll explore the strong fundamentals anchoring the company, those massive contract wins, giving them revenue visibility for like years. The current technical signals, both good and cautionary, and maybe most importantly, the key risks that really define their world.
Great. So let's start by unpacking the core business because, to understand the valuation, you really have to grasp the sheer depth of their competitive advantage. BWX Technologies dominates a niche that's just essential for national security.
That's exactly the starting point. Their fundamental business is, it's the backbone of the U.S. nuclear Navy, period. They're the top provider of naval nuclear reactor components, the fuel, and that critical high-grade uranium enrichment needed, almost exclusively for the U.S. government. They're basically irreplaceable in that role.
And being irreplaceable really showed up in their 2024 financials. They reported $2.70 billion in revenue, which is, solid, an 8.31% increase year over year. But what really jumped out at me from the source material was the efficiency behind that growth.
Right. The efficiency is the key part of the story here. A company is managing its growth well when the bottom line, the net income, grows faster than the top line, the revenue. And in 2024, their net income jumped 14.68% to $281.94 million. That gap, that's what we call operational leverage.
Okay, so for the listener, what does that operational leverage actually tell us about how the company is structured?
Well, it suggests their fixed costs. Things like running those super specialized manufacturing plants or keeping up with all the regulations, those costs are being spread across more revenue. So each new contract, each extra dollar of sales contributes more to the profit than the one before it. It's kind of the classic sign of a business scaling successfully without expenses getting out of control. That's why their trailing 12-month net income margin is holding pretty stable and strong, right around 10.3%.
So if that's where they've been, what's the outlook? The analyst consensus seems pretty bullish, forecasting significant expansion over the next few years.
Oh, yeah. The street's looking for about $3.9 billion in revenue by 2028. That's almost, 50% growth from 2024? And maybe more telling, the earnings per share forecast shows that efficiency actually accelerating. It's projected to jump from $3.21 in 2024 up to somewhere between $4.04 and $4.46 by 2027 or 2028. So they're expecting higher margins, not just more sales.
And the reason this future growth isn't just like wishful thinking is because of their competitive moat and that massive backlog. This is really the structural defense of BWX Technologies.
Absolutely. It's like a standard defense contractor advantage, but then you layer on the nuclear complexity, it's amplified. We're talking serious regulatory barriers, incredibly long qualification cycles. I mean, the government is just going to trust anyone with naval nuclear parts and proprietary tech. You just can't realistically set up a competitor to do what they do, certainly not quickly.
And that backlog gives them revenue visibility that, few companies outside this kind of sector ever see. We saw the details on two huge recent wins.
Huge is right. They locked down a $1.6 billion U.S. Department of Energy contract for depleted uranium processing. And then a staggering $2.6 billion in U.S. Navy contracts for naval reactor components.
Wow.
So that's $4.2 billion in contracts already signed, locking in future work. That insulates them quite a bit from, broader economic ups and downs.
Okay, so the foundation seems rock solid, anchored by these multi-billion-dollar, essentially non-discretionary government contracts.
Right.
But can the balance sheet actually handle the scale and the risk of executing these enormous projects? Let's maybe check the financial plumbing now.
Yeah, section 2. And this is where their discipline really comes through. Even handling billions, the balance sheet looks healthy.
Yeah.
We usually look at two main things here. Leverage, how much debt they have relative to earnings, and liquidity, do they have cash for short-term needs?
Okay, let's start with leverage. The sources flagged their net debt-EBITDA ratio as being pretty prudent, under 2.0x. What does that signal?
So net debt EBITDA basically tells you how quickly the company could pay off its net debt if it used all its operating cash flow. It's EBITDA, just for that.
Mm-hmm.
Keeping it under 2.0x is quite conservative, yeah. It means they're generating strong cash compared to their debt, which gives them flexibility. They're not overly stretched.
And on the liquidity side, making sure they have enough cash on hand for immediate bills.
For that, the current ratio is key. Theirs stays above 1.2. A current ratio over 1.0 means your current assets are greater than your current liabilities. So having it above 1.2 shows they have a good cushion. They aren't scrambling to cover immediate costs, which is really important when you're dealing with potentially lumpy government payments.
Got it. And that strong financial base is enabling some powerful free cash flow generation. Looks like around $320 million expected for 2024. That cash flow, that's often the difference maker, right?
Absolutely. Strong free cash flow, FCF. It's the lifeblood. It's the cash left over after all the operating expenses and the capital expenditures needed to maintain the business. And this FCF lets them do two crucial things at once. Reinvest strategically, and we'll get to that in a second, and reward shareholders. Like with their dividend, currently $1 per share, which is well covered by that cash flow.
Okay, now here's where things get really interesting. The strategic pivot. Let's move beyond just the naval reactors to what they're doing in innovation. This could be what drives the valuation multiples much higher over the next decade.
Exactly. The defense work pays the bills and funds the R&D, right? But the really exciting growth potential, arguably, is in their advancements in next-gen nuclear solutions. We're talking specifically about their micronuclear reactor projects, microreactors, and the related TRISO fuel technology.
TRISO fuel, what exactly is that, and why is it considered such a big deal?
So TRISO stands for tristructural isotropic. You can kind of picture it as nuclear fuel particles wrapped in multiple layers of really tough ceramic and carbon coatings. It makes the fuel incredibly stable, incredibly resilient. It essentially prevents meltdown scenarios and lets reactors run safely at very high temperatures, which is crucial for these smaller advanced reactor designs.
So their deep expertise with sensitive government nuclear stuff positions them perfectly to be the go-to supplier for these advanced nuclear applications, both military and potentially civilian.
Precisely. Microreactors, these small, maybe even transportable nuclear power sources, they're really attractive for military use, like rapid deployment bases. But also increasingly for things like remote communities, industrial sites, maybe even large data centers that need reliable, clean baseload power 24/7. So BWX Technologies is connecting its established nuclear safety track record to this huge emerging infrastructure market. That diversification, that's incredibly important for long-term investors.
That structural story is definitely compelling. Okay, let's shift gears now and look at what the stock price itself is telling us right now. Section 3, market sentiment and technical signals.
Okay, technically the stock's showing clear strength. It's trading around $207.72 currently, and it's firmly in both an intermediate and long-term uptrend. It's staying above its 50-day and 200-day simple moving averages, which are key levels traders watch. The resistance level seems pretty well defined up near the 52-week high range, somewhere between $214 and $220.
All right, strong fundamentals, strong uptrend. But this brings us to a critical thinking moment. If the stock has run up so much, likely on that contract news, are there any technical warnings flashing, anything suggesting a maybe needed short-term pause or pullback?
Yes, there are. And this is where investors might need to be a bit tactical.
Sure.
Our sources specifically highlighted two related technical signals that appeared on October 22nd. They signaled a KDJ death cross and a bearish Marugozu on the intraday chart.
Okay, whoa, that's a lot of jargon. Let's slow down. Can you break down what that combination actually implies for someone maybe not deep into charting?
Sure. The KDJ indicator is basically a momentum tool. A KDJ death cross happens when the short-term selling momentum indicator crosses below the longer-term buying momentum indicator. Essentially, it suggests the stock might be overbought in the very near term, and the immediate upward trend is running out of steam. Sellers are getting more aggressive.
Okay, losing steam. And the Marubozu part.
Right. The bearish Marubozu is a specific candlestick pattern. It looks like a long black or red bar with almost no wicks or shadows at the top or bottom. It means the stock opened near its high for that period and closed near its lows. Very decisive selling throughout that period. So when you see that pattern combined with the KDJ death cross signal, it's a pretty clear warning. Aggressive profit-taking seems to have started, and sellers are dominating the price action right at this moment.
Okay, so putting that together, while the long-term story looks great, the short-term tactical risk is that the stock might be due for a breather, maybe a consolidation or pullback, likely driven by people locking in profits after that big run-up from the contract news. That makes sense.
Yeah, it connects the technical signal back to the fundamental news cycle, which is always good to see. And interestingly, we also see a bit of a discrepancy in the overall investor sentiment picture. The analyst consensus is clearly buy, which lines up with the strong fundamentals we discussed.
Then their median 12-month price target, which sits somewhere around $161.95 to $165.45, is actually way below the current stock price, near $208. So if analysts are saying buy, but their average target implies a pretty significant drop, aren't they kind of admitting it's overbought right now, even if they haven't formally changed their rating?
That is the critical question, isn't it? The source materials suggest that those median targets might just be lagging indicators. They haven't been updated quickly enough to fully reflect the impact of those massive new contracts and the potentially accelerated growth path. Analysts can be slow to adjust sometimes. However, you do see the high-end target reaching up to $220. That suggests strong institutional conviction that the momentum is sustainable, even after this recent rally.
And the institutional ownership data seems to back that up. The big players are still involved.
Yeah, institutional ownership is robust. Major holders like Vanguard and BlackRock have actually been increasing their positions recently. And, importantly, we didn't see any notable insider selling reported. That suggests the management team themselves still have confidence in the long-term trajectory. They aren't cashing out at these levels.
Okay, that institutional support is definitely key, especially if there's some short-term technical choppiness. It suggests the big money sees pullbacks as maybe opportunities, not red flags. All right, let's transition then to section 4, catalysts and risks. What are the key things that could drive this stock over, say, the next 3 months or so?
Well, the most immediate catalyst is definitely the Q3 2025 earnings report. It's scheduled for November 6th. This report is really critical because it'll give investors the first real look at margin trends and any operational updates on how the execution of those huge multi-billion-dollar contracts is actually going.
Right. We need to start seeing the initial revenue recognition from that $1.6 billion DOE deal and the $2.6 billion Navy contract actually hitting the income statement. That visibility really solidifies the growth story we talked about.
Exactly. And beyond earnings, we need to keep an eye on market structure flows. There's upcoming ETF rebalancing around November 25th, and then the big institutional holdings disclosures happen in early January. These events can trigger significant, almost mandatory buying or selling by large funds, which can definitely drive short-term price moves regardless of the company news.
Okay, so those are the known events. What about the speculative buzz, the rumors swirling around in the market that could have a high impact if they turned out to be true?
Yeah, there's certainly some exciting chatter out there. The first rumor involves speculation about more large new government contract wins, possibly related to expanding nuclear propulsion needs or other advanced defense systems, given the current geopolitical climate.
The second rumor, and this one could be more profound maybe, involves potential M&A, mergers and acquisitions.
Given BWX Technology's unique, kind of irreplaceable nuclear capabilities and all the regulatory clearances they hold, there's chatter suggesting they could be a prime acquisition target for a massive industrial conglomerate or a larger defense prime.
Right, and that would almost certainly mean an immediate premium for current shareholders.
Absolutely. And the third area of rumor focuses on the technology itself. There's unconfirmed talk about a potential major breakthrough disclosure related to their microreactor manufacturing process, something that could dramatically cut costs or speed up deployment. Now, if that turned out to be true, it could establish a really powerful first-mover advantage in what could eventually be a multi-trillion-dollar global market for clean energy.
Okay, lots of potential upside catalysts, some confirmed, some speculative. Now let's pivot to the risks, because no investment is risk-free, and BWX Technology's success seems to hinge on a couple of very specific factors.
Right. The primary risk, and it's structural, is contract dependency. This company is just heavily reliant on U.S. federal appropriations, defense budgets, decisions made in Washington, D.C. Any major political shift or budget crunch that deprioritizes naval nuclear readiness or advanced energy funding, well, that poses a clear downside risk to their revenue stream.
And the second major risk factor.
Execution. That fantastic growth trajectory we laid out earlier. It depends entirely on them successfully executing and delivering those huge, complex government contracts on time and on budget.
Right. These aren't simple projects.
Not at all. They're multi-year, highly technical undertakings. Any significant delays, cost overruns, or failure to meet the government's incredibly strict specifications could quickly squeeze their margins and undermine that whole growth forecast. It's just an inherent risk when you operate at this scale and complexity.
Okay, so let's try to synthesize all of this now, the strong fundamentals, those technical warnings, the potential future catalysts, and these very specific risks. Let's answer the listener's core question. Based on everything we've discussed from the sources, is BWX Technologies a good time to buy right now?
Based on the source material, yeah, the overall investment thesis that was provided gave it a pretty robust 9 out of 10 overall bullish rating. That bullish outlook is really driven by the combination of sustainable revenue and earnings momentum, that very healthy balance sheet we talked about, and the strong long-term technical uptrend. And all of that is underpinned by these powerful long-term tailwinds in both defense spending and the push for energy security.
So the answer seems nuanced, but generally positive, especially depending on your investment style. It looks attractive right now for maybe two distinct types of investors.
Exactly. First, for the more short-term tactical trader. The stock offers clear, actionable catalysts coming up: that Q3 earnings report, the subsequent institutional money flows, maybe even some rumor-driven spikes in the next quarter. But that recent technical warning suggests they should probably be patient, or maybe tactical, with their entry point. Perhaps wait for a consolidation near a key moving average, or use the volatility.
Okay, that's the trader view. And the second type?
Second, and maybe more significantly for many listeners, is the long-term structural investor. For them, it looks like a compelling buy-and-hold candidate. It offers industry leadership in a critical niche, essential defensiveness because of its government ties, and exposure to a market-reliable power generation that is only becoming more critical globally.
All right. And finally, let's leave our listener with that provocative thought to consider.
Right. So here it is. The company's current valuation seems largely tied to its core business, which is naval power, right? Defense. But its future technology, that TRISO fuel, those microreactors, it's aimed squarely at the much broader clean energy markets. So the question to mull over is this: how much does the world's growing, almost existential need for reliable, clean baseload power, totally separate from defense spending, how much does that need potentially change the valuation multiple for BWX Technologies over the next 5 or 10 years? That's what could shift the perception from just a niche defense stock to perhaps an essential global infrastructure play. Something to think about.